Good weekend, all. Ira Epstein with your SPDR ETF stock video, and this is your weekend edition, your wrap-up for Friday, the 24th of June, 2022. Interesting time in the market. You know, the market's got enamored today with the Roe versus Wade. It was all over the news and everybody looking at that. But we did get a rally out of the stock market. After, 3 weeks in a row of declines, you got a nice bounce. Not bad. It needs it. Why does it need it? Because you don't want anything that goes straight up or anything straight down. Corrections along the way take off the pressures that build in markets. Always remember that. Now, it wasn't hard for me, at least, to call the rally coming in the stock market because of the enhanced Bollinger Band course that I have. And just so you get a picture of it, let's get to that right here for you. If I let go, there it goes. What this course does is it matches what the Bollinger Bands do, which are an algorithm designed to keep the market trading within them, these white lines, if you will, 95% of the time. But when you add momentum with it, you get an edge that most people don't even understand. I fell upon this years ago, was able to put together a course with 13 video chapters in it, and we'll discuss it at the very end of this. So in the meantime, let's go back to our charts and talk about where we're at and let this just come right there. Now it'll come. There we are. By the way, hit subscribe if you're watching me on YouTube. That way, when I put these out, you get it right away in case sometimes on a weekend I'll put out the email for it later and you get this all right now. Helps us with the viewership as well. All right. So maybe we should just go to the market and take them one at a time because this is the best way to do it. I'm going to stay with semiconductors because, as you know, the president of Intel and others have been talking to the Biden administration, which is usual. Wishy-washy. Do you remember, was it 6 weeks ago, 8 weeks ago, we're going to throw billions of dollars at semiconductors and we're going to build plants so that we can do things in America and not rely on China for our semiconductors. I remember that conversation. Intel remembers it. So what did Intel do? Just what they should have this week. They were supposed to break ground. They didn't on their new factory in Ohio. Rather, they met with the president, and you know Joe, yes, you're going to do this, we're going to help you, we're going to do all this. And of course, it's all, I think he believes his own nonsense. Have you seen any action? So Intel said they'll push back the groundbreaking into July, and from July, they may have to go to August. We'll see if they ever break ground and just how far they go. It doesn't take a lot of money for a company like that owns the land to bring out some equipment, dig a hole in the ground, and then walk away from it until they know if the government's going to give them what they should. That's what they're going to do. You don't say no to the president. You just don't follow through, as he doesn't follow through and Congress doesn't follow through. And what semiconductors have been doing, though, is coming down. Why? Are there more of them around? You know, if you believe, as I do, supply and demand determines price, there's more semiconductors around somewhere. I don't get why the auto manufacturers are having a hard time getting them unless not all semiconductors are created equal. And that's probably what's going on. But in the meantime, I just saw the new Cadillac. They shut off sales of the current new Lyric until next year's new version because they don't have the semiconductors. That's important. When you look at what the stock is, or on this, the ETF, lower highs, lower lows, bearish as can be until you get back over 434.42, and you're about to get something even more bearish. It looks like the 18-week average of closes is about to get underneath the 100-week. That's a real serious resistance point in the market, and the support's been the Bollinger Band. Each time you've hit it, you've bounced away. You don't have to be a genius. Take the course. You'll say, oh, that's what Ira taught me. That isn't where I want to be short anymore. I want to be selling rallies. So if I caught that move, culminate, doesn't mean you can't re-enter shorts, but maybe you catch that difference to give yourself an edge and you take off a big chunk of what you were doing. Seems to work. But let's assume that the market wants to break from here because the trend is down. You could be going right into here, the 310, whatever that zone is, and the resistance now 420s. When we look at the momentum is down. So trend down, bias down, moving averages crossing over, recession. Oh, I forgot the recession word. Gee, everything that uses a semiconductor is called a good. And if people are scared because they don't know what this holds, did you see the University of Michigan consumer sentiment down again to a 50 level? Gets under 50, it's a big problem. And you're right there. Be careful here. The market, with the bounces and all, people aren't buying into it. They realize the Fed is the enemy now. The Fed is going after inflation. And they have one tool. What is it? Higher interest rates. One tool. You'll say, I read they can run off the balance sheet. Sure they could. What's that worth in total? A quarter point, half point when they do it? It's not that much. It's the interest rate scenario. So you're going to get a 75 basis point hike in July. Then everybody will see. Well, the good news for the market is doing the Fed's job. It has broken the back of copper. It has broken the back of SOXX. This is not a chart that's over 550. It's lost $200 a share out of 550, 40% of its value. Now, there's nothing wrong with the indices that make this up, so you get to a point where maybe it starts running out of downside momentum. I can accept that argument, but I'm not buying the bull argument. KBE, does this look to you like anything that's bullish? If so, send me the course you're taking because I don't see that. You could anticipate it's going to turn here, but you can't make an argument with lower highs, lower lows. This has been anything but bearish, and I would fully expect, 100% expect that the 200-week moving average of closes, the first challenge of it's going to offer support, and the smartest thing traders can do is maybe lift short positions and see what happens for a little bit. Does that mean they won't get aggressive on the short side? No, I think they still will. XLI, is that not the 200-week average? What do you do when you get to it? I said it last week. Down under the Bollinger Band to the 200-week, that is the spot professional money's coming out, the way I teach charting. Do I know what every pro is doing? Of course not. Do I know what I think the smart ones do? Yeah. Do I understand what ETFs do and how they program algos? I do. I worked with them. I used to represent different ones in the markets before all the electronics took over for a long time. I'm not going to mention the names, but absolutely, I can defend it and prove it. You learn the techniques from them. You see what they're going to do. By the way, just because they do it doesn't mean they win. If you think every time an algo trader trades, they're making money, boy, are you crazy. It doesn't work that way. Nobody, no system, nothing walks on water. The question is, you make your trades. The difference between winners and losers is how fast you get out of your losses and how much do you let the winners run. That's the ultimate difference in the market. XLE, you hit the upper Bollinger Band. Why are you hanging around? What are the odds of staying over that number? 5% of the time. Now, I don't know that it's going to fall that much down, but I know enough that in an uptrend, when you lose the embedded reading, I'll just take you to this, if I could, right here. You're going to learn this in the course. If you lose this reading, game over. You want to go sidelines. I don't know that it's going to go down there or where the heck it's going to go down. Let me come down there. I have no way of knowing if that's going to happen. I don't have a crystal ball, but I can tell you lost the uptrend. It has a lot of work to do if it's going to even try to get that back. In SPY, every subscriber of mine, Futures and Spider, I kept telling them all week long, I said, folks, we lost the bearish embedded reading. You're due for a bounce. Bingo. Up 6% at this point this week. I love it. I'm telling them to come out of shorts. Other people are going short. No. Do I see a trend change? No. 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 I see a market that's got massive resistance, 408 to 418. I can't imagine what would turn this market from here bullish. I realize there are some people saying that this market's going to be up by the end of the year sharply higher, almost 50% higher than this. I'm reading reports from different noted analysts. I'm not buying it. They might know something I don't know for the second half of the year, but based on that chart, I don't see it. GLD. This is a spot where pros came out of some shorts, but coming out of shorts isn't going long. That's all. Could come down. So I was telling traders this week, and by the way, I did have traders that I was telling on futures to be short. Pull in something. Did that last night. I don't win every trade. I have plenty of losers. Plenty. Call me Swiss for Swiss cheese. I've got holes through my body. Who doesn't? That's what a trader does. They lose. But I'm still standing here. I've watched these markets soar. I didn't get caught on the short side wrong. I didn't get caught on the correction bad either. That's the game. Disciplines. Lower high, lower low. Okay, I can make the argument the battleground's now the 200-week average to the lower Bollinger Band. And notice how the market is sitting here. Momentum's still down. There's reasons to not be short, but no reason to be long. ARK. Okay, is Kathy going to get something going for herself? I don't know. The market's certainly trying to develop the sideways action. It almost acts like last week. The market at 35.65 may have overdone it. The key is to get over 46.94. That might lead to a challenge of the 18-day average. In terms of momentum right here, both numbers are not under 20. You just have a market that is drifting along an oversold area as I'm reading it. Apple, you got to the Bollinger Band and you rallied back to the resistance at the 100-day average. That's been a support number. Yes, you stuck yourself under it. You came right back to it as you'd expect. It's hard to want to be short Apple right here, yet I'm reading reports where people are claiming that Apple has not priced in a recession at the current level of 141.66. I went back and looked at it, and I understand what they're saying. Now, that doesn't mean that I'd be overly aggressive against the Bollinger Band. Not going to happen to me. I'm looking that if you can get a bounce, 155.44, actually it'll drop down. It'll probably be in the 150 area, 153, should be the resistance zone, which ties in nicely with that last rally high. I'm looking for people to want to be short on the next rally up. Tesla, been in a bear trend again. You challenge this 100-week average of closes. The market's not acting like it wants to stay under it. In addition, are you going to embed? So you have a week here where both numbers are under 20. Last week, both numbers were under 20, but not the week before. So the answer is no. You're not embedded. You're at your most extreme, let's call it oversold, could get a bounce right here. Bounces are not any reason other than maybe not to be short. They could offer short selling opportunities down the road. So I look at that pretty hard. THCX, fully embedded. So on the daily chart, I have told traders very clearly, nah, I don't think you want to be trading for 20, 30 cents. That's all it's been offering. Back away. Yet on the weekly chart, this is still very bearish. Get a hard rally and don't get the red line to close over 21. I'll be the first in line to want to sell this again. Yeah, first in line. TLT. On the weekly chart, you are still bearish as can be. The dailies lost the bearish embedded reading. This type of reading went up to the 18-day average, petered out, coming back down. I'm looking for the pros, including me, to be putting out sell signals this week in this market. Excuse me. So that was the last chart that we have there. But let me take this moment, if I could, and take you into my enhanced Bollinger Band course because it is so important. It's 13 video chapters. First, I explain what the concept of a Bollinger Band is. Then I start walking you through how it's plotted, how it works with moving averages, and the slow stochastic. I put the three together, which is what most people have never done. Most people are just saying, well, this is how the Bollinger Band works, blah, blah. And they use the standard one. There's other ones you can use, many of them. John Bollinger teaches that himself, by the way. But you put this together, and I don't just leave you high and dry. You take the course, but the course is videos. The nature of a video means it recorded something in the past. That's not up to date, so how do I get you up to date? I'm going to give you a 2-week trial. Monday through Friday, you're going to be seeing in my subscriber video daily, spiders and futures, stocks, how they work, walk you right through it every single day. On the weekend, you're going to get the weekend version, like you're seeing here, weekly charts with that, walking you through that. You're going to get that education, and I think you're going to go, I get it. I understand the natural progression of the resistance and the support. Oh my God, where was I during all that? Let's assume you don't get that. You know, I can't get into your head. You learned another technique and you said, I don't like this one, I'm walking away. It's not expensive. It's going to stick with you. My guess is, my gut instinct, it's going to change the way you trade. It's going to give you a better idea of where support resistance comes in the market. It's not magical. It's right in front of you. Go to www.iraepstein.com education. It's explained there in detail. You can also at any point just take your cursor, move it on up here, and when you get to the top, an icon up here, click it, you'll be right there. I'm Ira Epstein. You have a great summer weekend. I'll see everybody Monday morning. Take care.